I think 2019 has been a great year for us. We've closed a new fund. We've started making a lot of new investments. And of course, whenever you close a new fund, you take a step back, you look at what sectors are interesting, what has worked in the past, what has not worked, what is happening in the ecosystem. And so that way, 2020 is a great year for us to reflect back and think on what we are doing. So we have renewed focus into a few. Our core remains the same. Our core remains tech-based early-stage investments. That's what we've been doing in the past. We continue to doing that. But of course, we made some tweaks. We've made some modifications based on what we've learned.
And then what are the tweaks? What are the modifications?
Two major things I think that we've added now, or focus is, one is we've started looking at hardware as a sector, which we were never done in the past. We believe India market is ready for hardware-based startups, for companies which are working with both hardware and software. So that's one tweak that we've done. Second tweak that we've done is that we've put a lot more focus on capital efficiency than we've done in the past. India as a market, we've seen companies which scale, we've seen companies which burn a lot of money, but as an early stage investor, if you build capital efficient companies, the chances of your returns are far higher, and the companies ending up being successful is also far more cycle across economic cycles. So those are two major tweaks that we've done.
You know, building a capital efficient business, I think that clearly will be a big trend this year. Would you agree? Also, the sense that we're getting from a lot of VCs is that the big checks that we saw really doled out in 2019 will not be the case now. So, you know, entrepreneurs have to really plan for the long haul with a massive course correction that this year will see.
No, I agree. That's a sense that I have, and many of us in the VC ecosystem have. Last few years, we've seen several companies which have grown by pumping in capital, which have used capital as a differentiator, capital as a moat. And the hope was that with capital, they will scale and become so large that, you know, they will become and dominate the market. But once when Uber went public last year, it became very, very clear that there was a discrepancy or a dissonance between what we private market people thought versus what the public market actually happened. So that was the first signal that, you know, even if you build a very large company by throwing a lot of capital, if you don't have a capital efficient business model, or if your unit economics are not right, the markets are not going to reward you. In fact, the markets are going to punish you. And of course, a few months down the line, WeWork happened, and that was the single biggest, you know, eye opener and wake up call for everybody in the ecosystem that, hey, we are going overboard, we are chasing going the wrong path. The fundamentals of the business, which is profitability and capital efficient, that cannot be sacrificed. You need to focus back on that.
Got it. You know, and also we have had a massive sentimental rub-off after WeWork really happened and the debacle that we saw. You know, coming back to Inventus itself, could you break it down to us? Early stage tech-enabled, great. For an entrepreneur watching this and wanting to pitch to you, what should he do really to get it right and know that he's pitching right for you?
Sure. So yes, at Inventus, we've been a tech-focused firm. We are sector agnostic. So we would like to see technology-enabled companies, but it can be in anything. It could be financial services, it could be food, it could be insurance, doesn't matter what. And when I say early stage does not necessarily mean an idea stage. Early stage means that the company is maybe 1 to 3 years old. The founding team is in place. The founding team has probably hired 5 to 10 people. They have a product out. And somebody is using the product, and you have data from that usage to show that, you know, somebody is valuing the product, somebody is deriving value of it. That's the stage at which we invest in, and that's what we like to do.
Got it. You know, I'm sure you would have had hundreds of presentations by you, pitches by entrepreneurs, and now you have a fair sense of not only works for you, but for the ecosystem at large. Would you want to really break down the do's and don'ts of really pitching to investors, also considering that money will really be tough to come by this year, so they better be making the best of the pitch that they'll do?
So the do's and don'ts, I think the first do is, I think the entrepreneur needs to be themselves. We've seen a lot of times entrepreneurs come in and try to, you know, switch the pitch in a way in what they think the investor wants to hear. Most of the time that doesn't work. So the single biggest advice I would give is the entrepreneur is very close to the market. Entrepreneur knows his or her business, and they should present it the way it is. So that's the first thing. The second thing I think they need to realize is that from a VC business model point of view, the only businesses which work for VCs are the ones which have a very large market and a potential to scale in that large market in a 4 to 5 year time frame. So they need to present and make a case as to, hey, this is a great business. And by the way, here's a large market, and here's why I, as an entrepreneur, will be able to scale in this business and make it sustainable in a 5 year period, or make it large enough in a 5 year period. I think those are the key things that they need to do.
What's a strict no-no as far as pitching is concerned?
A strict no-no is, if you're saying that, hey, I'm still working in my job, why don't you fund me? And then, I will go and build a business. That's a strict no-no, at least for us. The way we see is that if the founder believes in the business, they need to be all in themselves. So that's where the alignment of interest comes in. And that's where it gives us confidence that the founder truly believes that this is a great opportunity and is willing to be all in terms of their job, in terms of whatever they need to sacrifice to build this business.
Yeah, the willingness for the long haul and the dedication really matters. Coming to sectors that, you're personally betting big on, not only at Inventus, but something that will really play out very strongly for India. We've seen a lot of brands go global. Will that really stand out? But what sectors you feel, is there a lot of action in UPI with what we've seen over the last year as well?
So the SMB sector, I think, there's a lot of action happening. We've already seen some companies like Udan, etc., which are trying to get into that space. But we are at a unique phase in India where a large number of people are on the internet, including small merchants, small businessmen. They have been enabled thanks to smartphones, thanks to geo internet and everything else. And on top of that, you have the financial services layer of UPI, banks going online, some new banks coming in. All of that is happening. So there is some transformation will definitely happen in the way they adopt technology, the way they do their businesses, and how consumers interact with them. So there'll be an opportunity across the board in terms of enabling these merchants, enabling SMBs, or enabling consumers who interact with SMBs. So I think that's a big theme that's going to happen over the next coming year. The second, I think, big theme that we see coming is IoT. I think we've been talking about it for the past few years, but I think finally we've started seeing many companies which are coming out of India and Bangalore, Pune, Delhi in particular, these three regions where we'll get into that IoT space, be it consumer or be it industrial IoT, because India has the unique skills of getting the software built on top of commoditized hardware, which nobody else has.
Got it. You have to talk to us about the big unicorn part of your portfolio, PolicyBazzar. How did it really come by? What's the backstory? Also, considering you come in really early at this stage, of course, not all the bets are going to pay off. But if something like PolicyBazzar has, what did transpire and how did you really land on the bet?
Okay. So PolicyBazzar has a very interesting story. We invested in them back in 2013. When we invested, it was not a transaction engine the way we know about PolicyBazzar, but it was a lead gen product. PolicyBazzar used to generate leads and pass it on to the insurance company. We met Yashish, who's the founder. There was a few investors prior to us, but we were still fairly early on. They were not getting too much love from the ecosystem, largely because it's a regulated space. But we liked the founder, and one of the key things that we really liked was that it's hard to explain right now, but what we summarized it internally was that looks like the DNA of the founder is such that he will never missell to a customer. And the insurance industry till that point in time was such that agents were consistently misselling to consumers. People were being sold policies which are not necessarily the right kind of policy for them. And there was a general distrust within the ecosystem. So here, there was a founder, we believed, or at least the sense that we got was that it's not in his DNA to missell. So he's going to build a product which is right for the consumer. Second thing that we really looked at the market. India was one of the most underpenetrated insurance markets in the world. I think less than 1% of the people had insurance. So it had to grow. As the economy is growing, as the market is evolving, it had to happen. So that was the second thing. And the third thing that we were taking a bet on was that this is a regulated space. But if there's a market player who's doing right for the consumer and who's delivering value to the consumer, the regulation will allow and enable such a company to thrive and grow. That was a bet we took. There was no clear indicator or answer that, or no precedent of something like that ever happening in India, but just a hunch that we had. And it turned out. IRDA, which regulates insurance company, saw that consumers are benefit for him, and in process has eased out regulation consistently over the years and enabled players like PolicyBazzar to grow. So a combination of these three things kind of worked out in our favor, and of course, all of it is on hindsight.
And you're also a happy man now that you have a massive exit. So a lot more, you're richer a lot more now with the fund as well.
So 2019 has been a great year for us. We closed a new fund, which was a Fund 3, which is an India dedicated fund. And we had 3 exits last year, PolicyBazzar being the largest of them. PolicyBazzar was a secondary exit. We sold a company, Fund 2, to Reliance, and we sold a company called Asan Jobs to OLX. And I think with these 3 exits, we've kind of returned pretty much 96% of our previous fund. So it's been a great fund.
96%, that's a great number to have.
It's a great number to have, yeah. So it's within the 6th or 7th year of the fund, you returned predominantly large part of the capital, and we only have looking and waiting on the upside now.
Works well. Last couple of questions before I let you go. And Rutvik, we talk about it a lot more over the last few years, and we haven't had, something credible come out. When will we see Google, WhatsApp movement for India? Companies, large companies that will leave impact and sort of change things not only here in India, but globally as well.
So we are seeing early stages of that. Ola going and expanding globally, Oyo's trying to go and expand globally. Plus, some of the B2B companies, of course, have been doing that. Freshworks is the biggest example of that, where companies are going and expanding globally. But I think it'll still take another 5 to 6 years, in my opinion, before we start seeing a company which is built for India and starts expanding globally on a same scale as a Google or a WhatsApp does. All said and done, in India, we are still grappling with a lot of low-hanging fruits from an infrastructure point of view, from an opportunity point of view. Once they get solved is when the next step of innovation starts happening. Silicon Valley today is the leader. I think another 5-6 years will catch up.